Hey traders, let's take a moment to thank and feature one of our top sponsors, FX2 Funding. If you're looking to get funded, listen up. FX2 is offering traders the chance to trade with up to $200,000 in simulated capital and receive up to 85% of their results. If you're interested in getting started, use the link being dropped in the chat or the link down in the description below. If you pass the evaluation, you'll receive your feedback and gain access to your new account. FX2 allows traders access to a wide range of assets and allows traders to hold their trades over the weekend. FX2 is giving A1 Trading Show fans 15% off the evaluation fee if you use promo code A1Trading15. So if you'd like to learn more, again, use the link being dropped in the chat or the link down in the description below and use code A1Trading15 at checkout for a discount on any of their evaluations. Now back to the show.
All right. Good morning, guys. Welcome back to another live stream. Thank you for being here with me. We are, again, another day counting down to our CPI and PPI numbers. Should be a really, really interesting week on the back half. It really gets busy the second half of this week with that CPI number just being the key figure this week, I think. If we get inflationary numbers that continue to come down, my view is the stock market keeps going higher. The indices do well. Gold gets a pop. Dollar falls. I get on here and I do this every day, and that's been my consensus for a little bit. But Thursday and Friday will be where we actually test that theory and whether or not I am dead wrong about it, or if we're actually going to be proven right on this disinflationary trend. Now, I want to clarify, I'm not necessarily predicting what will happen for CPI numbers because I don't know for certain what will happen. But I think most likely, most scenarios, I still want to be long indices going into the event. So we've got a little bit of a boost here. The S&P 500 trade is going well. We are still long. I have my position here. So let me just get my pen going here. Okay. So I have my position. I went long over here. I have to clarify that I did not enter on this candle. I think I entered over here, and I was early to the trade, experienced some drawdown. I almost stopped out. It reversed, and then I was able to trail a stop tighter. So my stop loss is still in the red. I'll show you the trade itself. So what I do is I trade ETFs because in the US, as many of you guys probably have heard with the FTMO news today, FTMO shutting off US traders from using their thing. U.S. regulation does not like, for whatever reason, for their reasonings, I don't claim to know, they don't seem to like that U.S. traders can trade CFDs via prop firms. So if you're somebody who's using FTMO, then probably a tough piece of news to hear because, of course, that is super inconvenient to have to switch platforms again. And if you are funded, I don't exactly know what that situation is. By the way, I have a whole video coming out on that today. It's in the laboratory, meaning the editor has it, Chandler. He'll be getting that served up to you guys here later today. So be patient with us on that. But I know that's a pressing story, so should be big. SEC and Bitcoin announcement thoughts. Can you clarify what went on? Did something change with Bitcoin? I know that there was the fake one, right? There was a fake SEC like Twitter post or something that said like Bitcoin got announced or whatever, like the ETF got approved or something like that. And then I think that it was proven false, but I haven't been following that story really closely. I'm failing as a news cover guy, a news anchor here. So I apologize for that. But to be fair to my own defense, I'm not necessarily a crypto specialist and don't really claim to be, but yeah. Let me just read the chat here for a second. By the way, good morning, good afternoon. Thank you guys for being here. I just want to say, if you are new to the show, welcome. And if you're somebody who is a regular, I do recognize we have Tim in here, we have Malik in here, Dexter, Mark Davis. There's a lot of you guys who are regulars in here. Good to have you back. Good to hang out with you. And let's jump into some charts. So again, I'm still long S&P. I feel like a broken record. I've been just outright bullish for the last several months. But I took a trade. I wrote it up. I stopped out, and then it kind of left me behind. I stopped out over here somewhere in this candle. I got stopped out, and then price rallied without me. And then I actually got back into the trade. So I'm feeling a little vindicated with my idea to go ahead and take a profit. Not here. I didn't mean to do that. I took a profit over here on that huge run up. I'm feeling vindicated because I did actually get it back in at a better price. So I'm feeling a little bit like I got away with something, but S&P pushing here this morning. And I love this price action. I'm glued to this chart here this morning. So let me just show you this. We might have, I'm looking for it to happen. Let's see if we can get it. Possible bullish breakout on this candle. I would like to see it. You've got this little bit of a cup and handle looking pattern, right? You've got higher lows coming here. Let's see if we can get the break, by the way. We've got the 930 movement going on right now. Would like to see if that can actually break out. Here's the 1 hour view, by the way. We're at resistance, watching for a breakout. Here's the trade. I'm up $9,400 on this move. My China stock buy not doing so good. FXI, this is the Chinese stock market. High risk trade. I've been clear about this. I'll just pull it up for fun. This is a longer term trade for me. So you'll see I don't have a stop on this. This is I don't want to get too far into this, but essentially I think that Chinese stocks will have a rally at some point or another. I think there's so much bad news priced into China. And without getting further too far into that topic, basically, I think that this could be a longer term rebound play for China. And this is not a trade by any means. It's a longer term buy for me. But the S&P is in fact a trade, and we are again watching to see if this can break and perhaps move back to the highs. That would be great for the trade, obviously. And I can probably trail a stop here today if we can pop out. If we do break this level, by the way, guys, if we can get a strong close, let's switch over to S&P version. If we can get a strong breakout above this level, I will be trailing stops. For those of you who are in the VIP group, I'm keeping an eye on this one. So if we can break this level, that's going to be the play. We'll switch back to the 4 hour chart. So again, watching this candle on the 4 hour chart, if we break out or even close, how much time is left on this candle? 3 hours, 22 minutes. So it might take some time, but I might come back and just, midday here today. If we get a strong close outside of this level, we are, probably seeing some strength come in. And at that point, I will look to trail stops. Okay. So yeah. So do you not trade FX anymore? I certainly do. I have a euro dollar trade open right now. Here's my EU trade. But I would be lying if I said that I trade FX more than currency. I mean, indices. Indices are my bread and butter and have been for several years. There was a time in 2022, I traded currencies far more actively than the indices because the indices were so down in the dumps. And I don't really like to short indices very frequently. I will do it sometimes, but it's infrequent when I short indices, and it just doesn't suit my strategy as well as going long as a swing trader. So I typically am trying to time longs in the indices. And when the indices are doing terrible, I usually switch more to FX. To be honest, that's kind of the way I do it. But trading is, I think, people get locked into one area of the market and they don't trade anything else. I don't personally, I don't believe in trading only one thing. I trade many things because I'm a fundamentalist. I'm looking at lots of different markets. By the way, Dow, strong move. NASDAQ, S&P. Like, of the three indices, I switch indices. I often trade gold, which is not necessarily FX. Gold really would fall more under like futures, commodities, etc. But a lot of FX brokers, of course, offer gold through a CFD, XAU, USD. But I'm looking for gold. Man, gold cannot seem to catch a break here, guys. I've been a broken record on this topic. Let me give you my updated outlook on gold. Price action wise, I think this chart looks pretty bearish. Let me clean up my charts here a little bit. So price action wise, I think gold looks pretty rough, but I am fundamentally still a bull this year on gold. There's a couple reasons, but one of the easiest ones is, let me go to seasonality monthly. And we're going to switch over to gold here for a second. So gold. Okay, so seasonally, I've made this point like every stream for the last few weeks. So I apologize if you heard me say this, but it is, keeping it simple. It's what I'm focused on. Seasonally, the months of January, February, and March, and April for that matter, have seemingly been pretty strong for gold in the last 10 years. Okay, so I use this stuff when I take trades. I don't use simple technical analysis only. I also try to employ data to help me find higher probability trades. I trust, to be completely honest with you guys, I trust data more than I trust candlestick patterns, because candlesticks can be very deceiving. Lots of noise can happen. News can drop to change things. I like to look at data primarily. And so when I look at a chart, I can kind of conjure up something in my mind as to whether or not something is bullish or bearish. And I believe that charts can be deceiving in some ways. However, data I find to be way more powerful for that very reason, less subjective. So seasonally, despite gold being down here right now, we still have 2/3 of the month left. 2/3 of the month left for gold. And so I still have a bullish outlook. We'll see if that comes true, if it comes right. But I'm looking for a breakout concept to start actually chewing on some gold longs, but I'm not there yet. Like, this chart just does not want to catch a break. I've covered this chart for for years, but I've covered this recently, and just this same concept keeps happening. You get price popping up, and then selling comes into that rally. And the sellers have been so persistent here. I mean, respect to the sellers of gold right now. They have had such good, resiliency each time price tries to poke up into a level of resistance. So again, until that nature changes, I'm not a gold buyer. I'm just neutral. Like, I fundamentally, I'm bullish on gold, but technically I am bearish on gold. Do you see how that makes sense? So fundamentally, FA, technical analysis, fundamental analysis. Fundamentals, I am bullish. Technical analysis, I am bearish. So I have no trades to place. Does that make sense? Type yes really quick in the chat if that made sense, what we're talking about here when we talk about crossing fundamentals and technical analysis. On this channel, we combine both. We use data to back trade setups, and we also use chart patterns to actually look for ins and outs, entries and exits. Here's the thing, guys. I heard someone say it on CNBC, Josh Brown. I really, really enjoy his commentary. He's mostly a stock trader. Well, he is a stock trader. He's a money manager. And he made a point, and I absolutely love the way he said it. Fundamentals are your why, and technicals are your win. I'll say it again. Think about this with me. And I loop back a couple times, but I love the way he said it. Fundamentals are your why or why not, and technicals are your win. Most traders only trade win. It's kind of like, I can't think of a good analogy, but basically, so many traders are only trading the technical side. They're only trading the win. They're like, oh, when do I get in? When do I get out? But they don't actually understand market direction. Market direction does not simply come from technicals, in my view. Technicals can tell you when to get in, when to get out, but fundamentals tell you why you should or why you should not in a trade. Does that make sense? Type yes in the chat if that concept, the why and when. I absolutely love that. I think I'm going to steal it from Josh Brown. He's a superstar in the finance world, though, so I don't think he'll mind if I borrow his phrase. I'll give him credit. But why and when, absolutely love it for technicals, fundamentals. Absolutely beautifully said. So how do you get into fundamentals? Well, you read a lot, you watch a lot of content, you listen to podcasts, you go through a lot of data, and a tool like ours, obviously there is a sales pitch attached to this. So let me be very transparent. I have something to sell in the fundamentals department. We build tools that help to simplify fundamentals. I think you have so much technical. I think most people in this stream probably would agree that technicals is not like most people can get technical analysis within a couple hours. Like couple hours, all you need to get simple technical analysis that I use. Like within a few hours, you can understand about as much as I do in technical analysis. And that's where I think you just cap it out and you stop fixating on looking for a holy grail in chart patterns and you move on to what actually moves the markets. It's the data, it's the economic figures, it's understanding why CPI matters and why PPI matters and why durable goods and PCE numbers. Why did these numbers actually move the market? And what do they tell us could be heading next for markets? I'm on my rant. You guys know it's one of my most passionate subjects is fundamentals get so overlooked because they're hard, right? Everyone looks at technicals because they're easy. Fundamentals are hard. Most traders lose. Most traders don't use fundamentals. Most traders use technicals only. Do you see where I'm going with this? The point is fundamentals are separating hedge fund managers who all talk fundamentals all day long and retail traders who only look at chart patterns. Does that make sense? Anyone struggling, listen to Nick on fundamentals. I hope that you can learn something from my channel. I cannot say that I am the best for learning fundamentals ever, but I hope that if you watch my content, it is free to you. You don't have to purchase our software. You can still learn something just by watching. If I can help you do that, I would encourage you to subscribe to this channel and you can get daily, weekly, content constantly on the subject of fundamentals. Hang out with me. That's what I'm encouraging you to do. If you don't want to buy anything, then that's cool. Just subscribe to the channel. It's free to do. By the way, also, if you do want a copy of our software, if you would like to take on my challenge of embrace fundamentals and understand why the market actually is moving, the whys behind the market, again, I think my opinion, I think you're driving blind without fundamentals. That is kind of my hard opinion. Now, can pure technical traders make money? I think so. But I think that, if for many people, if they just gave fundamentals a chance, you cannot imagine how many comments I get. Nick, fundamentals have changed my trading. I finally am starting to get it. And if you're like, I don't get it, I only look at chart patterns, I look at trend lines, I look at breakouts, and I'm just not getting it, like, why is this not working? Maybe fundamentals are the area of the market you need to look at. But I will warn you, it's not as easy to sell as technical analysis. So yes, I do have something to sell. Yes, we built a product that assists with this topic. But let me be transparent. If I just wanted to purely sell you something, fundamentals are not a best seller. It's not as sexy or attractive as selling technical breakout, all that sort of good stuff. Like I said, I'm not bashing technicals. I'm saying that I think you need technicals with fundamentals. That's my point. I have a question on gold. Where do you think the support currently is for daily chart? Let's take a look at gold in just a second. Let me just say too, also, if you guys would like a copy of this software, we are currently doing discounts on the product. We'll drop a link here in the chat. If you click this link, you'll be able to chat with a rep on our staff. So here it is. Send us a direct message if you would like a copy of the Edge Finder, if you'd like to purchase one. We are a software company, so it's not a free tool. We stay in business because we sell this product. We work tremendously hard to build new data for our users each and every day. And I know we have a lot of people who watch these streams who are Edge Finder users. So shout out to you. And I always welcome any constructive criticism, feedback. If you'd like to help us improve the tool, you can always drop comments. We read the comments. We respect our audience tremendously. So if you ever have opinions about the Edge Finder that you want to tweak or adjust or improve, comment them, please. Voice your opinion. Also, while we're on the subject, one other thing, if you would like to try out the Edge Finder, we'll drop another link here. We'll drop another link here in the chat if you would like to try out the software. We will drop a trial link here. You can sign up, apply for an Edge Finder trial. If you would like to check it out for 30 days, that is something that we can arrange for you. We can set up for you, but just click this link, fill out the application form, and someone from my staff will reach out to you very shortly. And let's take a look. I apologize for the delay, guys. We said we would look at gold. We're going to look at gold. We're going to look at this S&P move. Still watching. For those of you who are watching the S&P with me, we are in profit. We're watching to see if we can get this breakout. Okay, so up 9,500 on this trade, looking for a breakout of this level of resistance here. If we can get that, I'll be looking to trail stops. I honestly think as long as we don't close super bearish today, I'm going to go ahead and close, or I'm going to trail stops. In fact, should I just do that while we're on stream? No, I'll do it right after stream. Guys, those of you who are in Discord, I will be adjusting that for you here in just a second. Let's see. Just keep an eye on the indices trades category. I'll be dropping an update on my trade shortly. I'm going to trail stops here today. Lock in a little bit on this move. Yeah. These are live fooling session for beginner traders. What is fooling traders here today? Getting a little rejection on this. Not quite a bullish breakout. We got to take away our idea. We're a little wishful thinking there, but we'll watch this. Again, watching to see how this candle closes. There are still several hours left on this candle, so it's not an immediate thing. NASDAQ, look at that. NASDAQ getting hit back while the S&P is holding. Dow also holding its gains here today. Let's take a look at that gold chart. We discussed it. Where's support for gold on the daily chart? Well, we're at least one of them levels. We held very well here. We tried to go higher. What's a little hesitating, what's keeping me from entering anything is that, I really execute my trades primarily off like the 4-hour chart. So when we get this rejection here on the 4-hour and it still looks bearish at a level of support, I'm a little hesitant. What I would have liked to see is that, here's that daily chart level of support. I'd like to see like this concept. Just looking for, okay, daily support gets hit, but can it actually hold? Like, can we break some of the resistance structure, right? A lot of times the fundamentals haven't worked or the market moves in the opposite direction. I will push back on that slightly and say that 9 times out of 10, the numbers that come out actually, the move very, very much represents fundamentally what's going on. However, not to be cheeky or aggressive, and I don't know this about you or any individuals who are watching specifically, but a lot of times people say something like this, but they don't actually understand fundamentals. So they say, well, the number was good and it went this way. Well, do you actually understand what the number meant? Because a lot of times, like for example, let me think of one. Let's say jobs numbers come out much higher than expected. And you say, oh, well, the dollar's going to go up. But in the same report, there was also wage growth slowing. And so the dollar drops. And you say, well, jobs numbers were really strong, so it does the opposite of fundamentals. No. You just didn't fully understand the report. The wage growth slowed, and that shows inflation cooling. The market loves that. And so they sell the dollar and they go into risk assets, right? You have to understand the fundamental story completely before you say, oh, fundamentals don't work, news does the opposite. Because that's in my view, that's lazy thinking, right? You don't understand the full story. You are just assuming you do and then saying, oh, well, the candle did something different. You might just not have understood it fully, right? Whereas the professional traders do, they acted on it and they're making money because of it. Does that make sense? Hopefully it does. Look at IWM. Small caps are getting ugly. Might want to look at the correlation with large caps. I'll have a look. Yeah, let's look at Russell, IWM. I do have puts that I've sold on this one. Yeah, Russell's struggling here. Look at that. I have puts. I sold puts before this run up, and I made some good money on that one. I sold puts at 196 with a expiration date of, I believe it's the 2nd of February, actually. It might be end of January. I can't remember. I've sold a couple different puts. Let me check. IWM. Here it is. Okay, IWM, 26th of January. I sold puts at 196. So in the instance that on January 26th, the Russell is trading at or under 196, I will be required to purchase the shares from the put buyer as I was the put seller. If that happens, I really don't mind. I think Russell could do just fine this year, especially if interest rates continue to come down and offset some of that pressure on smaller cap businesses. I think it could be fine, but we'll watch it. Let's see what else we can find here to talk about today. EU, I still have this trade, but look at this thing just going nowhere. Pound dollar, still struggling, consolidating. This is a daily chart, so just not really getting any follow through on GU or EU. UJ trying to push here today. Currency side, little bit of yen weakness, it seems. I mean, you had this clean downward trend that kind of getting challenged now, especially with this today's candle. Like this was what I thought would be holding well, did not hold. Well, I guess I think this still holds unless you break out of this. If you break out of that high, I think, dollar yen might have a little bit of squeeze higher for a little bit. But it depends how we close, I think. But this is definitely not as smooth as butter as it used to be with the selling that was going on. If this level breaks out, you may get a retest back up into this range. But it's possible we could just come back up to retest this area and then squeeze back down. But I am fundamentally still bearish, but price action for me too mixed. So I wouldn't take any trades personally. Yeah. COT data is saying UJ is holding higher. Let's go look at COT data. I got to refresh myself. Okay, so COT data, institutional money flow. Let's take a look. Dow still good. NAS, Canadian dollar, Kiwi, Aussie. Japanese yen, latest change. Bit of selling on the yen. However, more selling slightly on the dollar. This just kind of complements my neutral stance on the UJ right now. Because what you can see is that the dollar, and I believe that the Edgefinders output for UJ is still neutral, but I'll go check that. Dollar and yen both saw selling in the latest institutional filings. Let me go check top setups. I don't believe UJ is getting a signal right now. It is. Well, no, it's not. It's getting a +4. So still neutral, but it's actually almost leaning bullish. So I'm going to stay out of the way for this. It's not quite bullish. A +5 or greater on the Edgefinders output sheet gets you a bullish reading. You can actually read, if you have the Edgefinder, you can always just check the scoring parameters up here. S&P still bullish, Bitcoin bullish, CAD yen bullish, NAS 100, US 30 very bullish. Flip it around for a second. Take a look at the sell side. Australian dollar pairs getting bearish readings. Kiwi Swiss, dollar Swiss, neutrals. Yeah, so new COT data will drop on Friday, so that should be interesting. And of course, as we get the inflationary numbers as well on Thursday, CPI, Friday we have PPI. Both of those numbers will potentially move this column around, which can actually give us some strength or weakness depending on what we're looking at. Like I said earlier, guys, I am long S&P and I'm long euro dollar. If we get inflationary numbers that are complementing to this concept, then we stay kind of in the bullish camp. And if it gets challenged, meaning inflation is hotter than expected and it strengthens the dollar, it probably kicks me out of my S&P and euro trade. So that is where I am at with that. By the way, guys, if you guys would like a copy of the Edge Finder, I mentioned this earlier, but we've got 2 resources for you. You can either send us a direct message and ask us questions and pricing details. We have big discounts going on right now. If you shoot us a direct message on our website, click this link. It will connect you to a real person, not a robot, not a landing page, but a real person on our staff who can see with you if the tool is right for you, give you pricing options, give you all sorts of different details. You can have your personal conversation on what is right for you, and we can try and work it out for you. Or if you would prefer to try out the software, you can apply to try out our software on our website here. We'll drop the link for that. You can try it out by applying here, and someone from our team will reach out to you with access potentially for an Edge Finder trial if that's something you want to work out. How much does it cost to join your private group? Kingsley, same response. If you would like to join the private group, if you'd like to join our coaching webinars or get access to the trades we're sharing in real time, you can do so by joining our VIP group. To get information about that, pricing details, options, etc., just chat with someone on our staff. We have a couple people who would be happy to help you out with that. So click that very first link there in the description, or the link here that just got dropped in the chat to speak with someone on our team. Guys, that's going to wrap up the show here today. Again, members, I'm going to be probably trailing my stop on S&P, and no real big update for euro dollar. We're still pretty flat on that trade. So any updates I will make inside of the VIP group. And with that said, guys, thank you very much for tuning in to today's show. Have a great rest of your trading day, and we'll see you back tomorrow.
Attention A1 Trading Show fans, if you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
Here at A1 Trading, we've been building something big, building something for you, trader. Introducing our brand new line of TradingView indicators. We have 5 brand new indicators that can be added to your TradingView account in seconds. We craft tools useful for both beginner and more advanced traders because everyone wants to find better trade setups and simplify their market scanning. All 5 are available now and easy to apply to any chart on TradingView. If you want to learn more about our momentum, volume spikes, candlestick counter, head and shoulders, or extension zones indicators, message us with the link in the description or the link being dropped in the chat right now to start building your own set of TradingView indicators.
All right, thanks again for watching today's show. Our goal at A1 Trading is to continue to bring you free value through our daily videos and articles, keeping you up to date with the latest market coverage. If you like our content, make sure to subscribe for more. And hey, I'm going to need you to get out of here. We got some heavy equipment on its way, and you're kind of in the way, so you need to move along. Frankie, that hard hat needs to be on your head.